But I also want to talk to you about GBI on the gold side, right?
Yeah.
I'm hearing from everybody in the gold space that's kind of sales are going through the roof. Everyone's scrambling to get physical, can't get hold of it. What's going on? What do you hear? I know you're not in the business day to day, but what are you hearing?
Well, I've been being apprised of the situation. Settlement in the United States, you cannot get next day delivery of metal, period. And it's more so now. Maybe there are little pockets. Maybe if someone is selling out of a certain vault and someone wants to buy it, you can. But look, the U.S. Mint ran out of Silver Eagles a few weeks ago. Someone told me that you still can buy at Degussa, which are storefront entities in Germany. I can't confirm that or deny that, but for settlement next day, something you can't get. It changes almost day by day. There were a few days ago, you could only buy for storage out 3 months. But I will tell you this month, and this is not just for my company, but for other players in the space, the volumes are up 5 to 10 times from the previous months. So it's been a complete blowout, and I think it'll stay high. I think that the virus definitely accentuated a lot of this, and when the refiners come back on stream, I think that spread between physical and futures will come back in. But you know what? We may have people are beginning to understand that paper gold is not physical gold, and that spread may stay for a little while, maybe not as wide. But also, look, all these things are working at once. What we've discussed about gold before, in the last 20 minutes or so, the big macro behind gold, that's coming together with the realization that physical is a lot better than GLD, is a lot better than futures, and all the reasons why, which we could get into on another day. And we know them. We've talked about them. They were falling on deaf ears for many years. But now there's an understanding that I want to have my gold with my name in a vault. I want to know it's there, or in my vault at home. But I think that the case for storage, especially in larger amounts, you don't want to have millions of dollars of gold in your house. And we offer storage in 7 different places around the world. That's very rare. A lot of these coin dealers, most of them don't. They don't have storage. And so for larger, more institutional players, you want to do a big chunk. We're really seeing that business explode.
What's your view on silver? Silver, for me, is always, I'm never that interested. I'm always interested in gold first. Then there's occasionally a point where the silver is the call option or the rocket ship once everything starts moving.
Yeah, I mean, look, to be really honest, I never make money in silver, and maybe that was because when I was actively trading or managing a portfolio, it just the volatility was too great. My track record in trading and being long gold versus silver, I mean, it's 9 to 1. I mean, yes, to me, it makes sense. But when silver was 17 a few weeks ago, I thought it was going to 25, and it went to 12 instead. I still think it's probably going back to the old highs and more eventually. It's super cheap, but I don't know when it's going to do it. It has a mind of its own. Yes, it's rocket fuel. One thing I might say that's different now is that, remember, part of this bull phase has been driven by central bank buying of gold. In the last 2 years, you've had more central bank buying of gold, the two largest years basically ever in 40 years plus since the DPEG. And so to me, gold is becoming re-monetized. Silver, I think, will follow gold. But I think there's something special going on with the gold now. And I talked about this recently in an interview I did for the Hard Asset Alliance. that gold, I think, is remonetizing. And I think for years, gold was not really considered cash, was not really, in the 90s, certainly gold was ignored. In the 2000s, it was low, and then in 07, 08, the 08 crisis, it sort of became a hedge against the banking system problems, and then also responded to all that QE. But it wasn't being purchased by the central banks and by larger institutional clients in the way that it has been in the last 2 years. And I think there is this sense I don't want to say move off a dollar standard, because I don't think that the U.S. reserve status is being questioned. I don't, look, I think that central banks around the world don't want to hold as many dollars. It's not attractive to hold them in treasuries. And so I think they have been moving into gold. And you see it in the data. Also, when you own dollars and you own treasuries, if your country does something that the U.S. doesn't like, maybe they decide you can't get access to those dollars. And I think
Russia de-dollarized essentially.
Right. That's right. And I think there are other central banks who see that and say, other countries say, well, we like the U.S., but that's a risk we don't really need to take, especially when the 2 years are yielding 25 basis points, right? And so there's been a move to remonetize gold, and that's why gold is up at new all-time highs versus the basket, the GMI basket, but not at all-time highs against the dollar. So you're thinking, well, why does that happen, right? It's because those countries, the Brazilians, the Argentines, all of these countries, they have more of an experience, more of a history with gold and also with currency crises than the U.S. So gold does have that aspect. I think it's just come to the fore in the last 2 years. And then also something new also is that in the next 5 years, mine supply will be going down. CapEx in the mining sector has dropped over the last 5 years. Discoveries have gone down. And as you know, my conversations on Real Vision with John Hathaway and Tom Kaplan were all about the sort of structural deficit that we're going to see in gold over the next, 2, 3, 4 years, depending upon how high the price goes. And, Sam Zell took a major position in gold in January, just simply based on the supply demand. Yeah, and he talked about this on CNBC, I think, but strictly based on supply demand factors, not the virus and maybe some, he talk about the uncanny timing. But so I think you have that also going for gold.
So I think to start wrapping up, I want to go back to a point you made right in the beginning of our conversation about the potential for gold to replace bonds in pension portfolios or in portfolios overall, which it hasn't done. It took a long time for hustling from some people on Wall Street, on the gold desks to try and get institutions to even look at it again. From the 90s, they didn't want to own any of it. And slowly it's been incrementally moving up. And then the central banks, as you've just talked about. What is your idea with how they can do it, and how big a deal is it if it becomes part of actual portfolio allocation again?
I think if around the world, and I did this presentation in 2010 for the Drobny group. Do you remember the Drobny? Those, and it was, and we did a tremendous amount of work for this presentation, but we basically found, and I think the numbers are exactly the same, or pretty close to the same, that if, let's say, institutions worldwide move to a 1% to 2% allocation, there wouldn't be enough. Obviously, there wouldn't be enough gold in the world to satisfy those needs. So you have to think it's not all the institutions. You're starting to see it slowly. I think that's going to be one of the main drivers to taking the price up over the next 5-6 years. I think it can double or triple. I think, and that'll be one of the drivers. And again, you'll get more supply. You'll get a supply response. They'll take positions in the miners. They're very cheap. And I think they'll own a lot of physical gold. I think that the time for owning GLD and futures. I just think that that's not really an intelligent way. I mean, if you think about it, or even owning gold with the banks, you own gold as a hedge to banking system problems. Why would you ever have your physical gold sitting in the basement at any of the larger banks? I mean, you pick them. I think if we were going to get even a 1 or 2% allocation to gold from all the institutions, it would eat up all the available gold, certainly all the investment gold out there. But you're not going to get that. You're going to get plenty of people who are going to be stuck in the old mode of thinking gold doesn't yield anything, like Warren Buffett or any of the naysayers from over the past few years. But I do think you will get some of the more forward-thinking people to start considering it. And I'm seeing this just in the last 6 to 9 months. Certain people, let's just say, who are involved with the advisory role I have with this endowment, people who you might not necessarily ever think would consider gold, are starting to see it. And they talk about it as gold as cash. So because cash yields 0 and the short end of the yield curve yields basically nothing, they're like, it's cash with a free option. And so to the upside. And so when I started to hear that from people who have rejected it for years, it just gives me the sense that we might be heading into a new period.